Defying many predictions, the U.S. economy escaped recession in 2023. Inflation eased enough for the central bank to pause its rate hikes, and U.S. inflation fell to 3.1% in November, ticking down but still above its 2% target.
My colleagues and I understand the hardship that high inflation is causing, and we are strongly committed to bringing inflation back down to our 2% goal.
That was the message from the U.S. Federal Reserve at the start of the year. In 2023, the central bank continued its most aggressive rate hiking campaign in decades. The Fed raised its key benchmark lending rate 11 times since March of 2022, hovering between 5.25% and 5.5% since July. It's still higher than it's been in more than 20 years. Pundits and analysts argued over the Fed's tactics and their expected impact of its aggressive hikes on U.S. growth, labor, and American consumers.
We do think the Fed is fundamentally flawed, that their framework for forecasting is not good.
I think as far as inflation is concerned, I would give Powell A-. He did very well and inflation is down.
Defying expectations, Americans kept spending despite sky-high interest rates, higher prices for goods and services, and astronomical housing costs. Consumer resilience spurred growth as unemployment remained low.
All that reemployment gave more money for people to spend. And so the tight U.S. labor market is actually making the U.S. more resilient. Because again, normally it's a cascade of less investment, less employment, and then the consumer spending less. So we don't have that problem this time.
More economists now have a favorable outlook for the American economy in 2024.
I think it's increasingly likely that the U.S. economy avoids a soft landing because it won't be landing at all, meaning that we'll avoid a recession, we'll have growth that continues closer to the longer-term trend of about 2% on an annualized basis.
Both economies and Hatfield believe the focus in the new year will shift to rate cuts as the Fed continues its fight against inflation. In its final meeting of 2023, Fed officials projected 3 cuts next year. Hatfield thinks there will only be 2. In response, he expects more investment in small caps and S&P 500 companies.
We've seen, a rally the last several weeks. You're looking for 2024 to end above 5,000, 5,100. Mm-hmm. That's the high end of the consensus. So you're bullish on 2024.
Absolutely.
He also believes there are no real credit risks to banks after 3 regional bank failures in the U.S. earlier this year. But Economies believes it won't be all smooth sailing, even for bigger banks.
The good news for them is that they're highly profitable. So within a couple of years, the losses will be over. They will be wiped out by the profits. But what happens during the next couple of years, it's still some danger for these banks, as I said, including very big ones like Bank of America.
And many experts say the global economy could face major headwinds from a potentially volatile U.S. presidential election and from the conflicts between Russia and Ukraine and Israel and Hamas.
That's clearly a risk, particularly when you have 2 wars going on, each of which could disrupt the energy markets.
The domestic politics in the United States are significantly affected for a change by the world situation. Usually they're not, but right now they are.
Hamrick says U.S. fiscal policy could also pose a risk to the global economy next year.
Officials have only been able in the Congress to address essentially kicking the can down the road for a short amount of time with respect to funding the government, and have not been able to summon the political will to resolve the long-term fiscal challenges that the U.S. faces.
Karina Mitchell, CGTN, New York.